Hello and welcome to this ISR Consequential Loss Made Simple video series. My name is Grant Sillis, and my purpose during this series is to discuss the key topics forming part of the ISR Consequential Loss section to develop your knowledge and enable you to address this important coverage confidently with your client, ultimately leading to, firstly, a greater take-up of this cover within the business community, and secondly, professionally tailored coverages that meet the needs of your clients. When discussing consequential loss covers with your client, it is important to be able to understand the terminology they are used to using in their day-to-day environment, and constantly relate this back to the insurance terms we use on a day-to-day basis. Simply describing cover as loss of profits can lead many to think that it is not relevant to them. Rather consider it in terms that a business could lose income as a result of lost sales and/or increased costs. As a result of this, a comprehensive policy will need to cover both loss of profits due to sales and additional expenditure incurred to avoid or mitigate a sales loss. Over the last 18 months, I've had many discussions about the challenges you face in persuading your clients to actually take this cover out and determine the appropriate level of cover that will assist them getting back into business following a loss. As a result of these conversations, I've noted your comments and developed the framework for this series so that it addresses the challenges you constantly face. This series is not designed to be heavy or technical in nature, but rather provide a high-level framework of the key topics in as short and snappy time frame as possible. The framework of these sessions is that they will comprise 5 short videos covering, firstly, difference between accounting gross profit and insurable gross profit. Secondly, different forms available in the market. Thirdly, different specifications applicable to different occupations. Fourthly, cover at premises away from the insured's premises where the insured operates. And finally, we will look at the maximum indemnity period, calculating declared values, setting the limit of liability, and understanding the traps for sublimits. To finish this introduction, I just want to consider the terminology that will arise during the series, and which is used in accounting and insurance circles. By highlighting the key terms and differences now, I'm looking to create a solid foundation from the outset. Variable costs, or costs of goods sold, in accounting equal uninsured working expenses in insurance, which are not covered under the insurance policy. Fixed costs, or operating expenses in accounting, equal standing charges in insurance, and they form part of what is covered under the insurance policy. Net profit equals net profit and is the other part of what is covered under the insurance policy. Net loss equals net loss and wouldn't be covered. Accounting gross profit does not equal insurance gross profit. In these sessions, I will constantly refer to consequential loss, as this is how it is termed within the ISR wording, and I think it is important to consistently utilize the terminology in the wording you're handling to try and eliminate confusion as much as possible. When I provide training on package policies, however, I revert to the words business interruption, as that is the terminology utilized within those wordings. In each series, I'll outline what I'll cover in the session and sum up with key takeaways at the end of the session. With that in mind, the key takeaway from this session is that this topic is best broken down to the framework I've outlined to keep it simple, and consistent use of terminology is very important.